Forex Focus brought to you by IG here with Paul Capetta to talk about, Paul, the best performing Forex pairs of 2023 so far. We're going to tell you how we measured it, and we're going to go through the list and everything else, the price action over the last year, where we're at historically in these Forex pairs that have obviously been around for decades. Thankfully, so much data from IG to go over. But yeah, Paul, how you doing, my friend?
Good, man. How are you?
Fantastic. I thought it would be a nice opportunity here nearing the end of the year to go through what has been really wacky price action, because we're coming off of 2022, Paul, where we saw extremes for pretty much every Forex pair. And it was just a matter of how many years could you go back, right? Like you're talking about dollar versus euro, pound, yen, Australian dollar, all these major Forex pairs. And it was like, these are the most expensive dollar prices versus these other currencies since this date. And so huge extremes in 2022. 2023 started off with a little bit of dollar bearishness. But I think a lot of people will be surprised by the performance that we're seeing by the end of the year, because we're right by extremes in a number of currencies, right?
Yeah, I mean, with the move in rates, I mean, last year was probably the most volatile we've had in a long time, where you got some extreme moves to historical extremes. So you've had that kind of two-way dynamic moving. This year's been a little back and forth more, because we had basically almost like a pause in rates, and then rates really accelerated in the summer. And when I say rates, I mean yields, long-term government bonds. But that's what caused some of those moves. But now some pairs are even unchanged on the year, like where they basically, the dollar weakened in the beginning of the year and has came all the way back. And then there's the yen story, which I'm sure we're going to cover.
Of course. And with that, let's go through these top Forex pairs by pip performance. That's how we're measuring this here, because you can of course look at percentage performance, and honestly it was very similar, but I wanted to do this by pips just because when you start, for example, roping in pound versus yen, dollar versus yen, and then pound versus dollar, it can get a little hairy if you're using percentage terms, because they have different quote currencies in each of those. So we went by pips, and you can see here the top performing pair of the year right off the bat might be, I know it's not going to be a surprise to you, but might be a surprise to some people at home, was that pound yen. And then right there behind it, euro yen. And I'm sure if you had guessed it before watching the segment here, you would have thought, oh, it's got to be dollar versus the yen. That's got to be the top performer of the year. They're sitting right now above 150, and that is right there approximately 30-year highs for that dollar yen. But I think an underrated piece right off the bat is that, yes, pound versus dollar is sitting around 120, historically on the lower end, but it has been kind of an underrated solid year for pound, all things considered. Was there anything that caught your eye right off the bat before we dig into each of these individually that you were like, oh man, I wouldn't have expected that to play out here in the top 10?
Yeah, the Swiss franc pairs are definitely something that's interesting, something I tend to look at less, but they are interesting currency pairs. They do move a little bit different. It's a little bit, they do tend to have a correlation with the Eurozone, because obviously Switzerland is in Europe, but it's a different pair there. Euro pound's an interesting one, because you would think with both of those central banks tightening rates that it wouldn't move too much, but it actually has quite a bit. But the yen's the big story. Dollar CAD historically has a good correlation with oil, but really hasn't this year. So that's an interesting one. But yeah, overall, there's some interesting things to talk about here.
Highlighted some great pieces there. I didn't even think about the fact that we've got dollar CAD and Aussie here, commodity currencies, the Canadian dollar tied to crude oil, Aussie tied to gold a lot of times. And both those commodities at various points throughout the year had huge bull runs, and CAD saw more of it than Aussie did tied to gold. CAD saw some of that rallying off of crude oil, but really a big break in correlation there. And also, I do want to hit on that other piece that you hit on, which is weird to see, before you kind of dissect it further, which we will in a second, that Swiss franc actually performed really well this year relative to the dollar, relative to the euro. When you put this up on the board, and now remember that forex pairs, a lot of the price action is driven by interest rates. And so all else equal, theoretical example here, if you have the euro and the Swiss franc, and the euro, like it has in the last year or two, has increased interest rates to now be above 4%, and Switzerland has remained in kind of mediocre interest rate territory, 1.75%, you would expect that euro to appreciate relative to that Swiss franc. But as we'll dissect further, the franc has held in really well as a European currency to the dollar and to other European currencies, given that Swiss rates have not escalated at all. Maybe you can give a little color to that Swiss franc piece, because it's similar to Japanese yen. Mm-hmm. There's the interest rate piece, sure, but there's also like a different flavor to it as well.
Yeah, the different flavor is the risk-off flavor, when it's the flight to safety type currency, and the reason for it historically is Switzerland's been a neutral country in all sorts of wars historically, which is why people tend to flight or send their money there. So people will actually buy Swiss francs or hold Swiss francs, which is more of the supply demand side of it. More on the demand side is where you get to that. That's the main thing I would see there. There's a little bit of uncertainty in the world, as we all are kind of aware. So that's where you kind of get some of this Swiss action is how I see it.
And specifically, obviously, closer to Europe than to, the U.S. That would affect, the U.S. being a flight to quality versus Canadian dollar or something like that. Obviously, Russia and Ukraine, Middle East, geographically much more direct effect to the Euro area, UK, and Switzerland. But then also, what's kind of, what's been started to talk about, they've been starting to talk about this in recent months, is European economic fear as well, that we also haven't been seeing so much of here in the US, is I think a part of that flight to quality for the Swiss franc relative to the euro and pound, that risk off action, to your point, is European economic data has been coming in pretty rough as of the last couple of months. And so, really interesting to see, rates really driving that US dollar over the yen, for example. But Switzerland able to have this moderate interest rate and still have a really nice year for its currency relative to even the dollar at 5.5% interest rate. But let's get into these movers and just have kind of a lightning round of running through the recent price action and also where they lie historically. Starting with this pound yen, Paul, it might not be the most popular major pair to trade, but you look at this chart and you notice a couple of things. One, it's up over 2,000 pips as of this writing, 2,400 pips here, going from around 155 to 160 to now 185. So huge move on the year. You rarely see a 15% move in a currency pair. But also that 185 level is right around the high since 2015. So you've got a historical extreme here. But then also on top of that, 185 has obviously been a pretty important level because they've gotten up there a couple of times this year and they've retreated, but not by much, and they sit there right now.
Yeah, I mean, and this is purely, in my opinion, purely an interest rate move here. The Bank of England's, I just looked this up because I was interested, is 14 successive interest rate hikes up until the September meeting. So they raise interest rates rather aggressively, probably even more aggressively than the U.S. on some terms. So, I mean, that's what the move is there. And we've heard it from the BOJ that they're not changing policy. Now they're starting to change policy. The market's almost forcing their hand. Yeah. And the economic data out of Japan has been getting better, where they're actually showing some growth, showing a little bit of inflation. So that's starting to change some tides there, but still change in the straight interest rate differential has made that kind of move exasperated kind of over the year, and it's been an interesting move too. You look at this chart, there is some aggressive daily moves in there.
Yeah, and it's a similar story for this euro yen piece as well. And this is like I say, we start to get into the highest price since X, because it's the highest price since 2015 for pound yen. For euro yen, they'll do you one better, even though it wasn't a better performing currency pair on the year. It was only up 2,200, 2,300 pips, Paul. But best price for euro versus that yen since 2008. And this is slightly different flavor here, given that they've been just moving through 160 in recent price action here. But similar in that, to your point, the ECB has been increasing interest rates, and the BOJ has just been sitting unchanged. And yeah, this is a classic scenario, just skipping over to dollar yen now, where you see a very similar setup, whereby, it's a similar story. And if you're trading any version of yen, keep in mind that, maybe being long or short euro yen and dollar yen and pound yen gives you a little bit of diversification. But at the end of the day, it's a very similar trade, because to your point, Paul, this is all interest rate differential for the most part.
Yeah, exactly. If the BOJ were to change their stance, a lot of this could change pretty quickly and get you back to your historical levels on all of these pairs. But it's
it would affect all three at once, right?
Yes, yeah, exactly. All three at once, and it would be probably rather aggressive. You do see some of this in dollar yen. If you look in July there on that chart, you see how quickly things can come unraveled. And historically, that's definitely has happened. If you look back on the IG platform, you can look back on the weekly charts and look at some of the weekly moves in yen, and it gets aggressive at times when things move.
Yeah, absolutely. But for the time being, trading above 150, and that 150 has been the approximate high for 30 years and still sitting there for dollar yen. And so, yeah, bad year for yen, great year for pound, euro, and dollar versus that yen piece. But now let's get outside of that yen story and start to talk about here in the mid-range. In the top three there, Paul, a lot of it is just central banks hiking interest rates and Japan not doing anything. Here there's a little bit more nuance. The pound actually did hold in pretty well against the dollar, given that I would still call this net on net a bullish year for the dollar in a lot of ways. The pound still did appreciate by 200 pips, 2 pennies or so against USD. Out of everything that wasn't dollar, and we'll get to Swiss franc in a second, the pound was kind of the best performing major currency, you'd say, right? Yeah, for sure. And again, it was what I said earlier, is those rate hikes. The BOE was very aggressive all year. The inflation's been a lot higher in the UK, which has kind of caused that. But that's where you had real high inflation over the summer in the UK, and you've seen it pull back, and the BOE has signaled they're almost pausing at this point. So that's where you also have to remember last year was a very tough year for pound. 105 for the first time.
Yeah,
in more than a decade.
We saw 105 for all of maybe a day, but that came back pretty quickly. There was some more going on there. You can look up what happened in England during that time. There's a bit of a nuance to that, but it's had a good year. Definitely back up now off of historical highs, which is going to be in your 130 to 140 range, but still kind of a rebound year for the pound. Yeah, all of that being said, pound being kind of stronger than euro and up on the year against dollar, it's still sitting at 120 to 125, which is historically kind of low and feels almost like a down year, given that at one point it looked like the Bank of England was going to be more hawkish and be more aggressive than the Fed. And that's what you can look. You see in the summer there, they were taken off. It was 130, and everybody was wondering, oh man, are they going to get back to like 140, 150 type of range? And so even though the pound, number 4 performer here in our top 10,
still feels like they kind of they underperformed expectations almost. And that can also be said for this Canadian dollar piece as well, as dollar appreciated against CAD last year and appreciated against them this year as well, to the tune of around 200 pips, and sitting right there at 137, 138, Paul, really close to 140, and 140 has been the high for this pair for the last 20 years.
Yeah, and then the recent moves are interesting because you see the oil move right there, right? I mean, that's the oil move, is the Dom move from 139 to what's like 136 and a half. So that's your oil move there. When Israel, the Middle East started kind of those tensions started heating up, you see that move. So the correlation is there to an extent, but you also seen the rebound back in the dollar. And again, there's a lot of this is interest rates driven. The Canadian economy is a little bit more weaker now. There's some concerns in their housing market, and among other things. So it's an interesting one. Definitely, there's nothing that says it can't go above 139 or 140 at all. But one that you also have to remember, where is oil? So it's got some multiple dynamics as a pair.
Yeah, absolutely. And here, euro, another one similar to pound that felt like it was going to be one of the best performers of the year, and it eked out a small gain against dollar. Let's just call it unchanged on the year, and feels like really underperforming expectations, and sitting there around 107, really still closer to parity than historical average for this pair, right?
Oh yeah, absolutely. I mean, and I think we hit on it earlier. The European economy does seem to be slowing. The data, I mean, today was inflation came in a little soft, but retail sales did bounce back. Still negative month over month, I believe it was, but not necessarily positive. It was still a negative print. So it's an interesting one. Obviously, one of the most widely traded pairs. You've seen some aggressive moves in this. I mean, we were up at 112 in the middle of the summer, and we thought, well, what if this thing goes to 115? Who knows? Like we didn't know where it was going to stop, and then we had that real acceleration of rates in the U.S., and it's brought it all the way back down. And we stopped at, I mean, 105 seemed to be the level and line in the sand, but then it's bounced back. It's kind of been range bound for the last 2 months.
Sets up for a really interesting 2024, given that it looked like it was going to bounce back this year, back down to unchanged on the year, really wondering, will they challenge parity again in 2024? We'll see. Euro pound, just really quickly here. Obviously, euro underperforming sterling on the year, but not to that great an extent, and it was worse for euro at different points, as that pound piece was the stronger of those European currencies, Paul. But I do want to spend just a little time here talking about Swiss franc, because underrated strong year for Swiss franc. Obviously, you see dollar down on the year relative to the franc, and the dollar has not really been down relative to anybody on the year. But also look at this euro versus Swiss franc action, and you're seeing euro losing 300 pips to the franc here, and that's to your point of risk-off action in the euro area, the continent in general, right?
Yeah, exactly. I mean, you don't really have the acceleration of rates in Switzerland, but you have that risk-off play. European economy is slowing. You see this move. This is your trend line lower. Basically, doesn't mean it can't break trend, but it's moved lower and precipitously lower all year.
Yeah, absolutely. And as a last piece, and this maybe has flown under a lot of people's radars because you have yen, kind of the worst performer on the year, pound and dollar, still good performers here at the end of the year. Aussie has had a really tough time trying to fight back, and a lot of that has been owed to the Chinese economy, right?
Yes, yeah, the weakness in China from an economic standpoint has really played through in the Aussie dollar. Also, the RBA, which is their kind of Fed, has really stopped on the interest rate hikes. Inflation there isn't crazy high, but it's basically moderated, and they don't seem to be taking any further action there, which has led to the kind of decline in the Aussie dollar. And then obviously the move in the U.S. rates has made this one move a lot. Does have a little bit of correlation with U.S. equities as well, so you do need to keep an eye out for that.
Yeah, and there you have your top performers and bottom performers there with the Aussie and yen